I don't know exactly what they can use to try to push reserves up, even if they're continuing QT, but I do know that they can't keep doing it. I mean, this is a finite system.
At the birth of our nation, our forefathers took a stand with their lives, their fortunes, and their sacred honor to establish liberty from oppressive political and financial tyranny. Now you can take a stand as well to declare your personal liberty from inflation and the banks. I'm Kaiser Johnson with Liberty and Finance, and these are the 4th of July week specials while supplies last. First, we featured 2024 American Silver Eagles at just $5.95 over spot. Next, we have 2024 Gold 1/10 ounce Eagles at $39 over melt per coin. And finally, in a Liberty and Finance exclusive, we have pre-33 AU Gold $10 Liberties at just $59 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you. Happy 4th of July.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Rafi Farber from the Endgame Investor, now on Substack. Rafi, thank you so much for joining us today.
Thanks for having me again, Elijah. Good to be back.
Well, it's great to have you today. I did want to discuss banks' balance sheets right now. Bank reserves, you're thinking that they are going to be falling soon, and this has to do with a long correlation that we've been seeing for quite a while between bank reserves and also the money supply, or the Fed's balance sheet. Now, the Fed's balance sheet has been decreasing for quite a while, and you're thinking that probably what we're going to see is bank reserves falling. So can you expand on kind of the correlation we've been seeing, and also what this means for the banking system?
Yeah. So the Fed's balance sheet is the monetary base, and bank reserves are based on the monetary base. If you look at two graphs, one of the Fed's balance sheet, all the assets on its balance sheet, and they have to add assets to their balance sheet in order to put dollars into the monetary base. And a lot of those dollars are going to go into bank reserves. Some of the dollars go into other things, but a lot of them go into bank reserves. So as the balance sheet expands, bank reserves also expand. And you can see this going back all the way to 2008, when the balance sheet started to really peak a lot higher very quickly. Then you saw bank reserves become ample, or become more than before 2008. They were always like modulated pretty close to zero, only a few $1 billion or maybe tens of billions. And then all of a sudden 2008, and it goes into the hundreds of billions and then the trillions. So since then they've been substantial. And as the balance sheet expands, you have more reserves. And as it shrinks, every time they do QT, then reserves follow pretty quickly afterwards. And it seems now that hasn't been, the correlation hasn't been as tight as it's been between 2008 to 2020. After that, during the 2020 printing, they added, what was it, 4 trillion, 3 or 4 trillion, I forget the numbers anymore. Many trillions of dollars to the balance sheet, and that expanded reserves. I'm looking at the graph right now. Expanded reserves by about, let's see, what is this? This is from 1.7 trillion on March 4th, 2020 to, looking at it, 3.3 trillion. So what is that? 2.7 trillion, something like that, close to $3 trillion, and they kept going up. And they, as the balance sheet peaked, and it kept peaking, reserves went up and up and up. And so once they started to fall after QT started, then you had the regional banking crisis. You had the regional banks starting to fail, and then you had the regional bank bailout. And after the regional bank bailout, then you had a slight rise in reserves. The thing is that every time that it seems that that reserves go to a point where they were before the previous QT, before the previous QE. So let's say they're doing QE1 and the balance sheet goes to whatever level, and then they do after QE2 and QE3 they do QT, and then it goes to a point where before the previous QE started, then you have a crisis, right? That's what happened in 2019 when I talk about this a lot, the apocalypse and the repo markets just got clogged up, and there weren't enough dollars. So that happened in 2019 when the QT that was there to reverse QE3 hit a level that the balance sheet was on prior to QE3, right? And then you had a crisis. So you have the same thing. We were on $3 trillion with the regional banking crisis. And now the question is, if QT has been continuing, if they've been shrinking the balance sheet week after week after week, and they have, and they're saying they're slowing it down, but we haven't really seen the slowdown yet, then why are reserves not falling as hard? And I don't know the answer as to why the correlation isn't as tight, but if you look at data points, right, and not the correlation throughout from 2020 to 2024, if you look at data points, then when the balance sheet was at the balance sheet from 2020, the reserves level is the same as it is now. So on a wider space, we still have that correlation, whereas what's happening in the middle is a little bit off kilter. And I have some theories about why that is, but we could talk about that as we progress. So basically the point is that I see bank reserves starting to fall now. From around, I'm looking at this chart, so from April 10th, after tax day, they started to fall. We were at 3.6 trillion, and now we're at 3.26. So that's the biggest fall since before the regional banking bailout. So I think we might be at a point where the bank reserves are going to start to fall, and once we hit $3 trillion or somewhere near there, then there's going to be another crunch in some sector of the banking sector.
What do you see that looking like? And it sounds like this could be coming pretty soon.
It could be. I mean, if I understood more about what exactly causes reserves to rise and fall on a weekly basis, which I admit I don't have all the answers to those questions. I can't say what is causing the weekly wiggles. But I do see the wide correlation, a tight correlation before 2020 and the wide correlation now from 2020 to 2024. So if we're back to the levels we were at 2020 at these levels in the balance sheet, we should continue down from here. And look, we might not. This could be another false alarm. But whether it is or it isn't, if it takes another month or two or whatever, as long as the Fed isn't expanding his balance sheet, there's going to be pressure on reserves. There are other factors here. They could loosen up on regulations on how to accumulate more debt or whatever, and that might influence reserves positively and push them up again. It's like you're trying to wring out a towel of all of its juice, and you can't do it with your hands anymore. So you bring a hydraulic press or something, and that gets the last few drops out. So that's what I'm saying. Like, I don't know exactly what they can use to try to push reserves up, even if they're continuing QT, but I do know that they can't keep doing it. I mean, this is a finite system.
And you mentioned the wider spread between the Federal Reserve's balance sheet and bank reserves. And you said you have a hunch of why that is. What is your explanation for that?
So I spoke with Keith Weiner, and this interview is up on my channel. And I asked him straight out, I was like, what is causing markets to go up? What is causing this sort of quasi-boom sort of conditions that we're having still? It doesn't seem to make any sense, because I said the money supply has been falling since 2022. It's been falling for 2 years. And Austrian business cycle theory says that if the money supply is falling, you have to enter into a bust. Right? So he answered, he says, I don't really follow money supply. I'm not like a monetary quantitative theory. Fine. So, it's a little different way of looking at things. Okay. And he says, well, I follow interest rates. So I said, yeah, well, interest rates are also higher. We're still at like 5.5% interest rates on 3 month. And it doesn't seem to be causing a bust. In 2018, 2019, we went up to like 2% from zero. And then all of a sudden there was like there was a repocalypse, and there was this Chinese pressure on the yuan or something. It looked very dire, and it looked like we were entering a bust. And now we're at 5.5%, and we still haven't had that bust. So Keith said, he was talking with his golf buddy, and his golf buddy had gone. I'm not getting the story exactly right. You can listen to the interview on my channel if you want to see exactly what he said. But he did say that the regulators and the head honchos of the financial system, or bank CEOs, or whoever it is that needs to take out more debt, regulators are allowing them to take out more debt by buying junk bonds without the requisite capital requirements of like, let's say if you wanted to buy a junk bond in, say, 2015, 2016, you need to put up X amount of capital, and now you don't. And why do you not need to? Because they want to keep those credit spreads narrow, and they want to continue the boom. And this is the way to do it. Just like get rid of all the requirements. It's akin to what did the Fed do right after the COVID lockdowns? They said, 0% reserve requirements. It's the same sort of thing. Like, so if you want to buy junk bonds now and you're a financial institution or you're a big company, you can buy these junk bonds and not have to put up as much capital. So that allows the system to go into more and more debt, and that will keep reserves that should keep reserves more levitated than they otherwise would be. But there is a limit to that also. Right, you can't just keep buying junk bonds, and then what if they get defaulted on, and then you're in the same problem, right? These defaults are going to happen because interest rates are high, and somebody's paying the interest rates, so somebody's going to default. So this only last for so long, and then it'll be over. So the question is it over now, or do you have more few drops in that towel that you can take a huge hydraulic press and squeeze out a few more drops? I don't know. I just know the inevitability here.
Sounds like kind of also what happened before the 2008 crisis, where people were qualifying for mortgage, getting into mortgages that they really couldn't afford. It seems like maybe a similar thing is happening now. Yeah.
It happens at every point in the business cycle. Whenever you have a monetary system based on debt, if you stop growing that debt, you will crash. Right? That's exactly what happened back in 1929 and 1873. And was it 1850, 1858, or this happened all the time in the 19th century and the 20th century. This is just the latest version of it, but it just keeps getting more modernized. But it's the same concept. You have to people get into more and more and more debt, and then when you buy more and more stuff, you look richer and richer and richer, but you're actually poorer and poorer and poorer. When that poverty is revealed, it's like all of a sudden nobody has anything. Right, except the people that have real capital, and they can buy all the stuff that everyone's defaulting on. And you have these really imbalanced situations where people that have gold and silver have way too much stuff. We're gonna have to figure out what to do with all that and how to redistribute it. It's going to be a problem because we don't. The point isn't to get as rich as possible. The point is to help reestablish a working monetary and division of labor system. That's not really a wealth. It's not really a wealth objective. It's a stability objective, which is why we do what we do, hopefully.
Now, more evidence that things are really coming to a head in the next couple months here. I know you reported on pending home sales. You're talking about how, obviously home sales have plummeted. And this means that banks could be really stuck with a lot of mortgages, leading to a recession. Can you expand on kind of that data point that you've looked at?
Yeah. So I think Peter Schiff pointed this out a few months ago. You have this phenomenon of very low pending sales. I think the lowest since, I don't remember what I said, since the 90s, or even lower than the lockdowns. I remember that. It was lower than if you have fewer pending home sales than when it was illegal for anyone to do anything, you're in a problem. Right. So the question is, well, then why are home prices going up if nobody's selling anything? If there's no transactions going on, why are prices still going up? Well, people have mortgages from when interest rates were very, very low. And why would they sell them if it's easy to pay those monthly payments? You could just rent out the house, so you wouldn't sell it. You just hold on to it and then use it for income, or just live in it, or whatever it is that you have. Then you'd have a situation where there'd be very, very few houses for sale, and those houses for sale are still going up. And meanwhile, who's holding on to these mortgages that are underwater? The banks. So a low pending home sales number with high mortgage rates currently means that these people do not want to enter into new mortgages because they'd be much higher rates and they have to pay a lot more. So they're just keeping what they have, and the banks are stuck with the bill. So we're going to have a banking problem. Right now, they're stuffing it away into unrealized losses, and this is part of it. Right? These mortgages that they're losing on because they're getting these payments that are very, very low from the low interest rate era, and now interest rates are much higher. So the costs of their capital are going higher and higher and higher, and what they're getting from their mortgages that people are paying them for the loans that they made is much lower because it's from back in 2021 when interest rates were like zero. So it's the same situation that happened with Nor and Chukin Bank, right? They're earning very, very low on their bonds and on their portfolio, and they're paying a lot because short-term interest rates are very high. So it's the same with every bank now, and you can see that in the pending home sales that people just aren't selling their homes, and still prices are going high on what inventory there is to sell.
Now, another factor you've looked at with respect to really not just the banking system, but the whole current fiat currency system that we are in right now is the yen, and how we're seeing extreme weakness in the yen right now. And you've mentioned how really as the yen goes, the whole Keynesian or fiat currency system goes. Can you expand on why we're seeing these issues with the yen in the first place and why it's really connected to the whole system?
Yeah, so I can put this in very simple terms. It just occurred to me a few hours ago. I was talking with Keith Weiner, and he was saying that the dollar would be the last currency to fall. And from a strict pyramidal perspective, with the dollar on the bottom of the pyramid and right under that gold and silver, then yeah, everything would flow into the dollar, and in a sense, you could see how that makes logical sense, because when let's say a Venezuela or Argentina, when their currency dies, they go to the dollar. When anyone's currency dies, they go to the dollar. They dollarize, right? Everybody does that because the dollar is the base of the pyramid. So that's what you do. And you need liquidity, so you need a currency system. You need a division of labor. That's what you do. So on that basis, just looking at that perspective, then yeah, the dollar would be the base of the pyramid. It would be the last currency to fail. But here's the thing. Now, if Argentina fails, or Zimbabwe fails, or Venezuela fails, or some third world country somewhere, right? They're not a very integral part of the Keynesian system. They're a part of it. They're somewhere in the pyramid, but they're very, very minor. Even Argentina, which is like a G20, and you could say that it's a respectable economy, at least when it's functioning, it's still not very big. But then you think about what about Japan, right? This isn't just a pyramid. Right? This is like a hyper pyramid, 4-dimensional, whatever. I mean, I'm just, I took a class once on these multi-dimensions. They showed us a hypercube and how it moves in the fourth dimension. So, try to imagine a fourth dimensional pyramid, and you have Japan here, and they've taken the bottom of the pyramid and they've stuffed it into their own thing by buying all these treasuries. So what happens to Japan if the yen falls, right? They go to the dollar. I mean, they already own $1.5 trillion in treasuries. So what happens when one of those countries that has its hand right in the bottom of the pyramid itself with all the treasuries that it owns? What happens when its currency fails? So then you have some kind of pull from the middle. I mean, I can't even describe what it's going to be, but we've never been in a situation where a country with major holdings in the dollar itself has a currency problem, right? That's a whole new problem for this pyramid or hyper pyramid or however the hell you want to describe it. I don't even know anymore. We've just never seen it before. So we could be just to think through it logically. If the yen really starts hyperinflating, right? It's 161 now. So what if tomorrow it opens up? I'm not saying it's gonna happen, but what if theoretically tomorrow it opens up at 200 and then it goes to 240 by the end of the day? What is Japan supposed to do? Right? The only thing they can do is dump all the treasuries on the market. They can't do this either because it would destroy everything. You see what I'm saying? So if we head into a situation where the yen really is hyperinflating, you've got $1.5 trillion in treasuries, or however much it is, 1.1 trillion. It's over $1 trillion. You have all those dollars in treasuries that are vulnerable, and you got to do something with them to save the yen or not save the yen. And then what happens? Then all the trade with Japan, that's part of the trade cycle of this whole Keynesian nightmare, falls out of the loop. And then what happens then? I don't know. It's not good, but it's a lot worse than Argentina or Zimbabwe.
Yeah, I mean, I think people have definitely seen the issues that Japan has had with respect to having over 200% debt to GDP, but it seems a bit far out there, right? It's not going to impact us, but I think you make the case that since they hold treasuries and since they're they're number one, they're the number one holders. It's not just they have a lot; they're number one. As they go, really, the rest of the system goes. It seems like, yeah. No, I think that's a very good case you've made there. Now, with respect to, I guess, the best assets to get into, obviously, you've talked about gold and silver in the past, and our viewers can look at our shows on that. Now, you recently just put out a video saying that platinum has actually, gold and silver have made new all-time highs in platinum. Now, a lot of people talk about how platinum is historically undervalued if you look at gold and even silver, as you mentioned, but it hasn't ever really played a role as a monetary metal. Do you think platinum, can you kind of explain for our viewers your view on platinum, and do you think platinum is an kind of alternative option for people looking to get outside of the system?
I think it is. It's interesting. I haven't had any deep thoughts about platinum ever. It's not something that I look at, and it's not really a market outside of money that I understand so much. I do know that I've read in When Money Dies and stories of the German hyperinflation, people were also hoarding platinum. It was a thing, because they were trying to preserve their wealth. I mean, gold and silver were primary, but platinum is secondary. I mean, in my thinking, there's no such thing as an objective money. There's degrees of liquidity among commodities, right? And the most liquid one will be money. If you're in a prison, it'll be tuna cans or mackerel cans. If it's Virginia in the 18th century, it'll be the most liquid commodity, which was tobacco back then, because they didn't have enough gold or silver to base an economy on it. Whatever, it's always the most liquid commodity. So platinum is never the most liquid commodity, so it's never going to be the money. But as commodities go, it's pretty damn liquid, right? It's much more volatile than gold and silver, but it's much less volatile than, oil or wheat or something. Maybe it isn't. It's a better money than wheat and oil, because oil burns and you can't really carry it. But okay, we all know this. What I noticed was that when someone came to my house and wanted some silver for a platinum coin he wanted to give me, so I just looked at the ratio and I was like, 34. I just calculated. I didn't look at a chart, and it was 34. So I gave him 34 ounces of silver. He gave me a platinum coin. It was fun, and it was my first platinum coin ever. I never had one. So I didn't want to import one because all these taxes and it's annoying. So and then I looked at the chart, zoomed out, and I was like 34. Well, that's an all-time low, except for 1980. And then I looked at gold. Well, the gold to platinum ratio is at an all-time low. And for 100 years, from like 1910 to 2015, 105 years, the platinum has always been more expensive than gold, almost always. And then all of a sudden in 2015, something changed. Now we could speculate as to why, but the point is, if you've got a lot of silver, and it's bulky, and you don't, and it's making you a little bit nervous because how are you going to move it? Which is a situation that I'm in personally, because I might have to evacuate. Again, we were talking before that this is a particularly bad day for the north in Israel. Here we had like 5 or 6 fires around, and everything smells like barbecue. Nobody was hurt, but things are burned. So I don't know. Maybe I'll have to take my stacks and just run away. I don't know. So it'll be easier to do that with platinum than it is with silver, though silver is much more liquid. So the thing is, if you've always wanted platinum, I wouldn't say start stacking platinum. That's not responsible. But if you've always wanted some, I think now is a very good time to do it, because if you trade some of your silver for platinum, it's very cheap. I think it's like 32 ounces now. It's even lower than when I got it. And you want to trade 100 ounces of silver for 3 ounces of platinum or so, go for it. It could be fun. I mean, and then if the ratio goes back up, you can buy back your silver or your gold and multiply your stacks just by doing that trade. You could do that with a coin shop easily. Taking
advantage of those anomalies is always a very fun thing to do. And hey, I mean, if we're at historic lows right now, it might be the right move. We can't give financial advice, but just look at the charts and see where we've been, I think is a good thing. And yeah, taking advantage of these anomalies can often be very profitable. So Rafi, really appreciate your time today. If our viewers are interested in learning more, they can go to the Endgame Investor on Substack. We'll put a link in the description of this video. If people are interested in not wanting to miss any of the interviews that we do with you, they can subscribe to this YouTube channel, hit the bell icon. Any last thoughts before we let you go, Rafi?
My last thoughts are just hang in there. We're close. We're close to something. It's going to be a wild election year in Europe. We're already seeing these quasi-revolutions, political revolutions, and more violence there. What is it? I think UK elections are today. France is on Sunday. I think the runoff is. And who knows what's going to happen with Trump and Biden. I mean, there's going to be a lot of instability, and both monetarily, politically, regarding war. It all comes together. It always all comes together, and it's coming together now. So exactly when the apex is, I don't know, but it's close. So just keep that in mind and stay calm and keep stacking and keep your head together.
Rafi, thank you so much for your time, and God bless.
You too, Elijah.
At the birth of our nation, our forefathers took a stand with their lives, their fortunes, and their sacred honor to establish liberty from oppressive political and financial tyranny. Now you can take a stand as well to declare your personal liberty from inflation and the banks. I'm Kaiser Johnson with Liberty and Finance, and these are the 4th of July week specials while supplies last. First, we featured 2024 American Silver Eagles at just $5.95 over spot. Next, we have 2024 Gold 1/10 ounce Eagles at $39 over melt per coin. And finally, in a Liberty and Finance exclusive, we have pre-33 AU Gold $10 Liberties at just $59 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you. Happy 4th of July.